Okay, hello everyone. Welcome to the fourth and last part of our Understanding Small Business Tax series. Please make sure that you are muted for the duration of the presentation and you can submit your questions into the chat. This presentation will be recorded and published onto the library's YouTube channel. Anyone who is registered will be emailed a link to the recording and a copy of the slides. This is the last of the event of the series, so I'm just going to do a shout out if you want to go to any future events. We have Friday morning, small business retirement planning. Next Wednesday, there's small business financial statements. And if for first Wednesday in December, if you still didn't get enough taxes, we have preparing your small business for tax season. The last two are from our first Wednesday series, which is a co-partnership with the SBDC. And I will turn it over to Jackie.
Thank you so much, Melissa. Got so many phones and people are pinging me all over the place today. I don't know what's going on, but I guess I was missed last week. Good evening, everyone. Thank you for joining me tonight for the last of our series of four about small business taxes. I hope for those of you who have been, returning, you found it informational and informative. Interesting and informative, I should say. So I'll just go through a brief bio that I've done at the beginning of each of the series. I apologize if this is repetitive for those of you who have been with me all throughout this journey. I'm Jacqueline Kelly Myers. I go by Jackie for short. I am a stakeholder liaison located here in the Rochester, New York office. I am part of the Communications and Liaison Division in the IRS. And in my current role, I am tasked with collaborating, informing, and communicating the IRS's priority outreach messages to all our taxpaying communities. I joined the IRS in 2006 in a customer service role where I prepared taxes and I assisted taxpayers with their accounts. I assisted them with setting up payment arrangements and answering any questions they may have had. And that was back in the days when the only way to get answers to those questions or to resolve issues on your account was to have an assister at the IRS help you with that. Now you can do that for yourself, and that's a whole nother presentation that perhaps we can get to in the future. And so that role was basically a customer service role. From there, I moved into into a auditing role in 2010, and I stayed there for the next 13 years. I was an auditor for the majority of the time, and then I became what they call a OJI, on-the-job instructor, where I taught other people how to be a tax compliance officer. I was also an acting group manager for a period of time, and I had a variety of other roles while I was there as well. I then moved into stakeholder liaison, where I'm pleased to be right now, where I'm using all of my knowledge, skills, and abilities to help you avoid the pitfalls of falling into an examination unnecessarily. So knowledge is power, and I believe that strongly. And so I'm very happy that you're here. I am hoping that you'll take this information and use it for your benefit and spread your knowledge, spread what you know to others. I would also highly recommend our website, irs.gov. There's a plethora of information on there and tools to help you. And you can also order publications from the website, and you can download them, you can view them electronically, or you can order them so you have a hard copy of it at the ready. I'm a paper person, so I kind of do like that. I'm trying to get with the times and do things electronically, but nonetheless, we have a lot to cover today, so I just want to jump right in. with lesson number 7, which is tax deposits and filing a return to report payroll taxes. So in our overview, we always start with our overview, and then we conclude with a review. In this lesson, we'll cover your responsibilities for depositing taxes and filing a return to report payroll taxes. Specifically, we'll explain the federal tax deposit process, deposit requirements and penalties, and show you how to file any of the following returns. Form 941, employer's quarterly federal tax return, if you are a quarterly filer. Form 944, employer's annual federal tax return if you're designated as an annual filer, and or Form 943, employer's annual tax return for agricultural employees if you are an agricultural employer. So making tax deposits, how often you pay these taxes depends on the type of tax and on the amount. There are a number of rules about when to deposit your payroll taxes, but the best time to make a tax deposit is the same day you pay your employees. The way you get it done right away without any worries about missing deadlines or not having the money when it is due. You can deposit anytime up through the deposit due date, but if you deposit late, penalties will apply. Deposit due dates. First, if the payroll tax is less than $2,500 for their current quarter or preceding quarter, and you did not incur a $100,000 next day deposit obligation during the current quarter, you can pay it with your Form 941 employer's quarterly federal tax return. But you have to file on time for this rule to apply. We'll talk more about Form 941 later. Second, if the payroll tax is $2,500 or more for the quarter, or you aren't sure if you or you aren't sure it will be less than $2,500 for the quarter, and your liability for the prior quarter wasn't less than $2,500, your deposit is based either on a monthly or on a semi-weekly schedule. Determining your deposit schedule using the look-back period. To know whether you are on a monthly or semi-weekly deposit schedule, you use a specific 12-month period called the look-back period. Your look-back period is the 12-month period ending on June 30th from last year. For example, to figure out your deposit schedule for the current year, you need to look back to those 4 previous quarters ending on June 30th of last year. So for example, if the current year would be 2022, the last year is 2021. Our look back period is going to be July 2020, August 2020, September 2020, October 2020, November 2020, and December 2020. Also, it will include January 2021 through June of 2021. So the look back period is 12 months of the previous quarters and ending on June the 30th from the previous year to figure that out. So if you're a monthly depositor, if you are a new employer and had no employees during the look back period, or if all of your taxes total $50,000 or less for the period, you are a monthly depositor. As a monthly depositor, you deposit monthly payroll taxes by the 15th of the following month. If a deposit is required to be made on a day that is not a business day, make the deposit by the close of the next business day. A business day is any day other than Saturday, Sunday, or a legal holiday. The term legal holiday for deposit purposes means any legal holiday in the District of Columbia. Legal holidays in the District of Columbia are provided in our IRS Publication 15, Employer's Tax Guide. Depositing and reporting are separate actions. Even though you may pay monthly throughout the quarter, you only file Form 941 once at the end of the quarter. Under the semi-weekly deposit schedule, deposit employment taxes for payments made on Wednesday, Thursday, and/or Friday by the following Wednesday. Deposit taxes for payments made on Saturday, Sunday, Monday, and/or Tuesday by the following Friday. If you're a semi-weekly depositor, you must complete Form 941, Schedule B, Report of Tax Liability for Semi-Weekly Scheduled Depositors, and submit it with Form 941. The Schedule B has daily sections on it. This allows you to report tax liabilities corresponding to the dates when wages were paid. Again, use the Schedule B to report the tax liability and not the deposits. Also, it's important to note if you have more than one pay date during a semi-weekly period and the pay dates fall in different calendar quarters, you'll need to make separate deposits for the separate liabilities. For additional rules regarding semi-weekly deposit rules, please see IRS Publication 15, Employer's Tax Guide. There is a third deposit rule you should know about. If you accumulate $100,000 or more in taxes on any day during a monthly or semi-weekly deposit period, you must deposit the tax by the next business day, whether you are a monthly or semi-weekly scheduled depositor. For more information on the $100,000 next day deposit rule, see the IRS Publication 15, Employer's Tax Guide. The deposit rules differ a little bit for some other returns, such as the Form 944, Employer's Annual Federal Tax Return, and Form 943, Employer's Annual Tax Return for Agricultural employees. You can find information about the deposit rules in the instructions for each form. Also, you can check Publication 15, Employer's Tax Guide, or Form 943, and Publication 51, Agricultural Employer's Tax Guide. Now let's talk about late deposit penalties. It's not uncommon for a new business to run short of cash, but don't forget that the money you hold for your employees is not yours to spend. You are entrusted with those funds. That's why the penalties are so strict. The penalties for late deposits can be a large and unnecessary expense for your business. In fact, businesses can fail because they don't clearly understand and follow the tax deposit requirements. In addition, the owner of the business can become personally liable for the employment taxes, which we'll discuss in a moment. So make your tax deposits on time. Trust Fund Recovery Penalties, TFRP. This is huge. If federal income, Social Security, or Medicare taxes that must be withheld, that is trust fund taxes, aren't withheld or aren't deposited or paid to the U.S. Treasury, the trust fund recovery penalty may apply. This penalty is 100% of the unpaid trust fund tax. So in addition to having to pay the tax, you're going to have to pay another amount equal to 100% of what was not paid. And this gets a lot of businesses in trouble. If these taxes are unpaid, if these unpaid taxes can't be immediately collected from the employer or business, the trust fund recovery penalty may be imposed on all persons who are determined by the IRS to be responsible for collecting, accounting for, or paying over these taxes, and who acted willfully in not doing so. To encourage prompt payment of withheld income and employment taxes, including Social Security taxes, railroad taxes or collected excise taxes, Congress passed a law that provides for the TFRP, or the trust fund recovery penalties. These taxes are called trust fund taxes because you actually hold them in trust for your employees. The TFRP may apply to you if these unpaid trust fund taxes cannot be immediately collected from the business. The business does not have to stop operating in order for the TFRP to be assessed. So I'm going to read a lot of additional information about the TFRP because it is that important, and many businesses fail because unfortunately they didn't turn over the taxes in a timely fashion. The TFRP may be assessed against any person who is responsible for collecting or paying withheld income and employment taxes, or for paying collected excise taxes and willfully fails to collect or pay them. A responsible person is a person or group of people who has the duty to perform and the power to direct the collecting, accounting, and paying of trust fund taxes. This person may be an officer or an employee of a corporation, a member or employee of a partnership, a corporate director or shareholder, a member of a board of trustees of a nonprofit organization, another person with authority and control over funds to direct their disbursement, another corporation or third-party payer, payroll service providers, PSP, or responsible parties within a PSP, professional employer organizations, PEOs, or responsible parties within a PEO, or responsible parties within the common law employer, a client of a PSP or PEO. For willfulness to exist, the responsible person must have been or should have been aware of the outstanding taxes and either intentionally disregarded the law or was plainly indifferent to its requirements. No evil intent or bad motive is required. Using available funds to pay other creditors when the business is unable to pay the employment taxes is an indication of willfulness. You may be asked to complete an interview in order to determine the full scope of your duties and responsibilities. Responsibility is based on whether an individual exercise independent judgment with respect to the financial affairs of the business. An employee is not a responsible person if the employee's function was solely to pay the bills as directed by a superior, rather than to determine which creditors would or would not be paid. Notice 784, could you be personally liable for certain unpaid federal taxes? This notice contains additional information regarding the TFRP, including the basis for the penalty and information about TFRP for employers who outsource some or all payroll duties to third-party payroll service providers. That's also known as PSP. Figuring the TFRP amount. The amount of the penalty is equal to the unpaid balance of the trust fund tax. The penalty is computed based on the unpaid income taxes withheld, plus the employee's portion of the withheld FICA taxes. For collected taxes, the penalty is based on the unpaid amount of collected excise taxes. If we determine that you are a responsible person, we will provide you a letter stating that we plan to assess the TFRP against you. You have 60 days, 75 days if the letter is addressed to you outside of the United States, from the date of this letter to appeal our proposal. The letter will explain your appeal rights, and you can refer to Publication 5, Your Appeal Rights and How to Prepare a Protest if you don't agree, for a clear outline of the appeals process. If you do not respond to our letter, we will assess the penalty against you and send you a notice and demand for payment. Caution, once we assert the penalty, we can take collection action against your personal assets. For instance, we can file a federal tax lien or take levy or seizure action. Avoiding the TFRP. You can avoid the TFRP by making sure that all employment taxes are collected, accounted for, and paid to the IRS when required. Make your tax deposits and payments online. Additional information on employment taxes can be found in Publication 15, Employer's Tax Guide, and Form 941, Employer's Quarterly Federal Tax Return. So that's just a word of caution to the wise. Electronic fund transfer for federal tax deposits. You must use electronic fund transfer to make all federal tax deposits. Generally, electronic fund transfers are made using the Electronic Federal Tax Payment System, or EFTPS. EFTPS is a free service provided by the Department of Treasury. EFTPS is safe, secure, and available 24/7 over the internet or by phone. For more information, you can go to our website at eftps.gov. Additional information about EFTPS is also available in our publication 966, Electronic Federal Tax Payment System, a guide to getting started. And you can locate that on our website at irs.gov. If you do not want to use EFTPS, you can arrange for your tax professional, financial institution, payroll service, or other trusted third party to make deposits on your behalf. Services provided by your tax professional, financial institution, payroll services, or other third party may have a fee. Reporting payroll taxes. Now let's look at the payroll reporting requirements for the majority of small businesses by taking a closer look at Form 941. You use Form 941 to report wages paid and taxes due on those wages quarterly. A quarter consists of 3 calendar months starting on the first day of the first month and ending on the last day of the last month of that quarter. Form 941 is due at the end of the following month. This makes the due dates April 30th, July 31st, October 31st, and January 31st. In addition, if you timely deposited all taxes when due, you have 10 additional calendar days from the due date to file. Also, if the due date for filing Form 941 falls on a Saturday, Sunday, or legal holiday, it's due the next business day. As we said earlier, depositing and reporting are separate actions. Even though you may pay throughout the quarter, you only file Form 941 once at the end of the quarter. Each calendar quarter, almost all employers who pay wages subject to tax withholding must file Form 941, Employer's Quarterly Federal Tax Return, unless you receive an IRS notification that you are eligible to file Form 944, Employer's Annual Federal Tax Return instead. There are some employers, however, who do not need to file Form 941 quarterly. If you are a seasonal, household, or agricultural employer, there are publications that may help you. Go to irs.gov and enter those terms in the search box to find out more information. Completing the Form 941. You'll need several pieces of information to complete Form 941. Of course, you'll need your employer identification number. You'll need to know the number of employees, total wages paid, include tips, taxable fringe benefits provided, and other forms of compensation paid to the employees. Also, you'll need to report the amount of withheld income taxes, and this means all income taxes withheld from your employees, including tax withheld from tips, taxable fringe benefits, and certain other payments. To complete the Form 941, include the total of all wages subject to Social Security, Medicare, and additional Medicare taxes. This amount includes any sick pay and taxable fringe benefits subject to Social Security, Medicare, and additional Medicare taxes. Have records of all tips. This will be added to the wages and other compensation. Always remember to have a record of your tax deposits available when you prepare your quarterly returns. This information This information helps you accurately report the amounts of your deposits and the type of deposit schedule you are required to use. You may have paid wages, but were not required to withhold income taxes. You still include those wages on Form 941. Do not include your contributions to employee plans that are excluded from employees' wages, such as 401k and cafeteria plans. Wage base. Also, there is a limit on the amount of wages subject to Social Security taxes called the wage base. Once the amount you have paid to an employee as wages reaches the wage base, do not withhold any more Social Security tax. The wage base may change from year to year. IRS Publication 15 shows the current year's wage base for Social Security taxes. All wages paid, however, are subject to Medicare taxes. In addition, wages paid over a certain amount are subject to additional Medicare tax. If you owe additional taxes, however, and the taxes owed are less than $1, then you do not have to pay the amount. If you deposited more than the correct amount for a quarter, you can choose on Form 941 for that quarter to have an overpayment refunded or applied as a credit to your return to your next return. Form 941 must be signed. If the business is a sole prop, the return must be signed by the owner of the business. If a partnership or unincorporated organization, by a responsible and duly authorized member, partner, or officer having knowledge of its affairs. If a corporation, by the president, vice president, or other principal officer duly authorized to sign. Form 941 may also be signed by a duly authorized agent of the taxpayer if a valid power of attorney has been filed. In addition, you may designate someone else to discuss the Form 941 with the IRS by completing the third-party designee section of the form. For instance, if the IRS has a question, you may want us to contact your accountant. Penalties and interest. There is a penalty for filing a late Form 941 return. There are also deposit penalties for making late deposits and for not depositing the proper amount. In addition, there are penalties for willful failure to file returns and to pay taxes when due, for filing false returns, and for submitting bad checks. Then interest is charged on the total of unpaid tax and the penalty. I'm sure we're all aware of those things. For more information on penalties and interest, we encourage you to review Notice 746, information about notice, penalty, and interest. It's easy to correct employment taxes if you make a mistake. Go to our website, irs.gov, and search correcting employment tax in the search box, and then click on that link. This will lead to the correcting employment taxes page where you can download the Form 941-X, Form 943-X, or Form 944-X, as well as the instructions on how to correct the errors. Employers can submit the correction as soon as they discover an error, and in the case of an overpayment, select to apply the overage to the next quarter or request a refund, as long as the statute of limitation remains open. Benefits of e-filing. There are options for filing Form 941, and in fact, most forms with the IRS. You can electronically file or mail a paper return. There are a number of benefits to e-filing. It saves you time, is secure and accurate, and you receive an acknowledgement within 24 hours. There are two convenient ways that a business can file electronically or e-file. You can purchase an IRS-approved software to submit the forms yourself, or hire an IRS-authorized provider. For more information on how to e-file, search e-file employment tax on our website, www.irs.gov. Outsourcing payroll duties. As the common law employer, you may outsource some or all of your federal employment tax withholding, reporting, and payment obligations. If you outsource some or all of your payroll and related tax duties, that is withholding, reporting, and paying over Social Security, Medicare, FUTA, and income taxes to a third-party payer, you will generally remain responsible for those duties, including liability for the taxes. However, an exception exists when using a certified professional employer organization, CPEO. For additional information on outsourcing payroll and a discussion about how each of the common third-party payer relationships, go to irs.gov and enter those terms in the search box. Information is also available in our publication 15 Employer's Tax Guide, which can be found on our website as well. So we've now reached our review. In this workshop, we discussed the basics of making tax deposits and filing a return to report payroll taxes. Specifically, we talked about due dates for tax deposits and penalties, how to determine if you are a monthly or semi-weekly depositor, and making deposits electronically. We also discussed requirements for reporting payroll taxes on Forms 941, 943, 944, and 940, as well as filing Forms 941, 943, 944, and 940 electronically. Don't forget to consult IRS Publication 15 Employer's Tax Guide if you need more information. You can also go to our website and enter depositing and reporting employment taxes in the search box for additional information. And that concludes our lesson number 7. And that's my contact information. If you'd like to write that down, if you want to reach out to me after tonight for any reason, you may do so. I am available. The best way to reach me would be emailing me. We can open the chat up to see if anyone has any questions, or if anyone wants to come off mute and ask a question, we can do that as well. Not seeing anything. No one's in the chat. No questions. Oh, maybe. Okay, no questions. Okay, great. Do we want to start our 5-minute break?
Yeah, let's, I will pause the recording. And yes, Tony, I'll be emailing the slides. And we will come back at 6:40.
Sounds good.
Okay, and we're back.
Ready to go?
We're all ready. Lesson 8, the final lesson.
Yes. Confetti, applause, hurry up. I don't know, whatever. All righty. All right, lesson number 8. This one is a little wordy, but I think it's also a good lesson as well. So this lesson is hiring people who live in the US who aren't US citizens. It's probably not a surprise that hiring people who are legally in the US but who are not US citizens can require treating them differently for federal income tax purposes. In our overview, in the segment, we're going to learn how to verify an employee's identity and status with proper documentation, withhold federal taxes at the proper withholding rate or treaty rate, deposit or pay the tax withholding properly, and file accurate and timely withholding tax returns. Before we get started, though, I would like to bring your attention to publication 519, U.S. Tax Guide for Aliens, and IRS publication 515, Withholding of Tax on Non-Resident Aliens and Foreign Entities. So that's going to be our overview. Whenever you hire someone, the first step is to determine that worker's tax status. For this discussion, we're assuming you're hiring individuals, and there are 3 possibilities for their status. They're either going to be a US citizen, a US resident alien, or a non resident alien. Individual tax ID numbers, or ITINs, is a U.S. citizen's tax identification number is that person's social security number, or SSN. Instead of having a SSN, however, a foreign individual may have an individual tax ID number, or ITIN. ITINs look a lot like social security numbers. They are 9-digit numbers that always begin with the number 9 and have a range of 70 to 88, 90 to 92, and 94 to 99 in the 4th and 5th digit. The IRS issues ITINs to individuals who are required to have a U.S. taxpayer identification number, but who do not have and are not eligible to obtain a Social Security number from the Social Security Administration. ITINs are issued regardless of immigration status because both resident and non-resident aliens may have a U.S. filing or reporting requirement under the Internal Revenue Code. An ITIN, however, is not a work permit. All employees must complete Form I-9, Employment Eligibility Verification. This form is from USCIS. You can find out if a potential worker is eligible by using the E-Verify system on the U.S. Citizenship and Immigration Services website, uscis.gov or everify.gov. E-Verify compares information from an employee's I-9 to data from the Social Security Administration and the U.S. Department of Homeland Security to confirm employment eligibility. Remember, it is against the law to knowingly employ someone who is not authorized to work in the United States. However, if you do employ illegal aliens, payments you make to them are subject to the same rules as payments you make to aliens who are legal. If you hire someone who is not a U.S. citizen, but who is still eligible to work in the United States, your first step is to find out if they're a resident or non-resident alien. Resident alien, green card. A resident is someone who has a green card or who has met the substantial presence test. A green card is USCIS Form I-551 Permanent Resident Card. It gives the holder the right to reside permanently in the United States and to work without restrictions. A green card holder is also known as a lawful permanent resident. Lawful permanent residents who are waiting for their actual green cards may have an I-551 stamp on their foreign passport. Resident alien substantial presence test. Someone without a green card can still claim resident alien status if he or she meets the substantial presence test for the calendar year. To meet this test, you must be physically present in the United States when on at least 31 days during the current year and 183 days during the 3-year period that includes the current year and the 2 years immediately before that. In other words, the person meets the 183-day test if the sum of the following is at least 183 days. 1, the number of days in the United States during the current year. 2, 1/3 of the number of days in the United States during the preceding year. And 3, 1/6 of the number of days in the United States during the second preceding year equals at least 183 days. So we're going to go through an example next. Let's say you were physically present in the United States for 150 days in each of the years in 2020, 2021, and 2022. To determine if you meet the substantial presence test for 2022, count the full 150 days of presence in 2022, 50 days in 2021, and 1/3 of 150 days and 25 days in 2020. 1/6 of 150. Since the total for the 3-year period is 225 days, you are considered a resident alien under the substantial presence test for 2022. Okay. So there are rules about what kind of days you can count and can't count. Of course, there's always rules. For example, you do not count days someone is present in the United States as a teacher or a trainee under a valid J or Q visa. IRS Publication 519, U.S. Tax Guide for Aliens, has a complete list of the exceptions. You can also call the IRS Business and Specialty Tax Line toll-free at 800-829-4933. Make sure you have the information on the number of days the person has been in the United States in the current year, the previous year, and the year preceding that. In summary, if your potential employee has a green card, an I-551 stamp, or passes the substantial presence test, there is nothing more to do. You treat them like a U.S. citizen for income tax withholding purposes, as well as Social Security and Medicare taxes. You can also include them when you pay your federal unemployment tax or FUTA tax. To find more information about these tests, go to our website, irs.gov, and search the term green card test or substantial presence test in the search box. You can also find more information in publication 519. Now let's turn our attention to non-resident aliens. This is defined as someone who is not a U.S. citizen or a resident alien by process of elimination, right? All non-resident aliens, however, are not treated the same for tax purposes. And in this segment, we'll discuss the general rules that apply to non-resident aliens and exceptions that apply to certain non-resident aliens. When someone hires a non-resident alien from any other country as an employee, he or she must give them a Form W-4 Employees Withholding Certificate and must verify the form is completed correctly according to the special instructions in Notice 1392, Supplemental W-4 Instructions for Non-Resident Aliens. When non-resident aliens file their federal income tax returns, they cannot use the standard deduction unless the non-resident is a student or a business apprentice from India. Some adjustments are necessary before you can use the general withholding tables in IRS Publication 15, Employer's Tax Guide. There are 2 steps required for calculating how much income tax to withhold from the wages of non-resident alien employees. For step 1, go to IRS Publication 15-T, Federal Income Tax Withholding Methods. There are 2 tables of amounts to add to your non-resident alien employees' wages, depending on whether you pay them weekly or at some other frequency. Table 1 pertains to non-resident alien employees' first paid wages before 2020 and which have not submitted a Form W-4 for 2020 or later. Table 2 pertains to non-resident alien employees who have submitted a W-4 for 2020 or later, or were first paid wages in 2020 or later. For step 2, enter the amount figured in step 1 as the total taxable wages on line 1A of the withholding worksheet in publication 15T that you use to figure federal income tax withholding. Add the amount from tables 1 and 2 are added to wages solely for calculating income tax withholding on the wages of the non-resident alien employee. The amounts from the table shouldn't be included in any box on the employee's Form W-2 and don't increase the income tax liability of the employee. The purpose of this adjustment is to figure the amount of federal income tax to withhold from wages of non-resident alien employees. Also, this procedure also only applies to non-resident alien employees who have wages subject to federal income tax withholding. So now we're going to discuss exceptions to general rules for withholding. A non-resident alien may be a resident of a country that has a tax treaty with the United States. That treaty may provide for lower tax rates or even an exemption from withholding for these individuals working in the United States. Remember, these employees are non-residents of the United States. If a non-resident alien employee wants to claim a tax treaty exemption from withholding instead of Form W-4, the employee must give you Form 8233, exemption from withholding on compensation for independent and certain dependent personal services of a non-resident alien individual. You, as the employer, must report wages exempt under a tax treaty paid to a non-resident alien on Form 1042, annual withholding tax return for U.S. source income of foreign persons, and Form 1042-S, foreign persons U.S. source income subject to withholding. Any additional wages paid to a non-resident alien over and above the exempt amount should be reported on Form W-2 wage and tax statement in the normal manner. Wages exempt from withholding. Per the tax code, wages or non-employee compensation are exempt from withholding of federal income tax if all three of the following considerations are met. The non-resident alien performing services is present in the United States for a total not exceeding 90 days in a taxable year, and the compensation for such services does not exceed $3,000, and the non-resident alien performs the services as an employee of or under contract with a non-resident alien individual, a foreign corporation, or a foreign partnership not engaged in a trade or business in the United States, or the foreign office of a U.S. citizen or resident alien individual, a U.S. corporation or U.S. partnership, including from within a U.S. possession. Wages or non-employee compensation are exempt from withholding a federal income tax if both of the following two conditions are met per the tax code. The non-resident alien is present in the U.S. in F, J, M, or Q non-immigrant status, and the compensation for services is paid by a non-resident alien individual, a foreign corporation, or foreign partnership, or the foreign office of a U.S. citizen or resident alien individual, a U.S. corporation or U.S. partnership, including from within a U.S. possession. Non-resident aliens who fail to file or file an invalid Form W-4 as required by IRS regulations shall have federal income tax withheld at the rates pertaining to a single status, zero exemptions. In summary, remember that non-resident alien employees who receive wages from you must follow special rules in Notice 1392, Supplemental W-4 instructions for non-resident aliens when completing Form W-4 Employees Withholding Certificate. If a non-resident alien claims tax treaty benefits, he or she must use Form 8233, exemption from withholding on compensation for independent and certain dependent personal services of a non-resident alien individual, instead of Form W-4, and you must make an adjustment to your non-resident alien employee's wages before using the withholding tables. Just like resident aliens, non-resident aliens are generally subject to Social Security, Medicare taxes, and FUTA tax, but there are exceptions. We've already covered the filing of a Form 8233 if an employee wants to claim tax treaty benefits. Remember, though, that wages not exempt by a tax treaty are usually subject to Social Security and Medicare taxes. There is, however, a way for a non-resident alien employee to be exempt from Social Security and Medicare taxes. It's called a totalization agreement. These are agreements between the Social Security Administration and various foreign countries. They address the situation where dual Social Security taxation might occur. That is when a non-resident employee works within the United States and must also pay these same kind of taxes to their country of residence on the same wages. The non-resident worker who claims an exemption under a totalization agreement needs to give you a certificate of coverage or similar statement from the appropriate agency of the foreign country, or if unable to obtain such a certificate or statement from the foreign country, obtain a statement from the U.S. Social Security Administration that their wages are not subject to U.S. Social Security taxes. You must keep a copy of the certificate for your records in case the IRS questions why you didn't withhold Social Security taxes. Now let's talk about our non-resident alien independent contractors. Independent personal services is a tax treaty term, and it refers to work performed by non-resident alien independent contractors. This category of pay includes payments for professional services, such as fees of an attorney, physician, or accountant made directly to the person performing the services. The difference here is that you might have to withhold taxes on payments to them, even though they are not your employees. This makes non-resident alien independent contractors very different from independent contractors who are U.S. citizens or resident aliens. The general rule is that you must withhold 30% of each payment you make to non-resident alien independent contractors unless they show you proof they have entered into a withholding agreement with the IRS. They must provide you with 2 copies of a letter from the IRS that states the amount of the final payment up to $5,000 is exempt from withholding. Or they must give you Form 8233 to claim a tax treaty exemption from all or part of the required withholding. Also, there are special rules if you yourself are a non-resident alien. If so, please call the IRS Business and Specialty Tax Line at 1-800-829-4933 or ask your tax professional. Let's review how non-resident alien independent contractors are different from independent contractors who are U.S. citizens or residents. Generally, you must withhold 30% of the money you paid them from their personal services unless the non-resident alien provides an IRS-approved withholding agreement or Form W-8 for reduced withholding. You can see instructions for the requester of forms W8BEN, W-8BEN-E, W8ECI, W8EXP, and W-8IMY. And those forms can be found on our website, irs.gov. Non-resident alien independent contractors use Form 8233, exemption from withholding on compensation for independent and certain dependent personal services of a non-resident alien individual, not Form W-4, employees withholding certificate, to claim their tax treaty benefits and any allowable withholding exemptions. Once you're done calculating and withholding, then it's time to deposit or pay the withholding. When it comes time to making tax deposits or paying the tax withheld for non-resident aliens, the rules are the same as they are for taxes withheld for U.S. citizens or resident aliens. For more information on this and depositing and paying business taxes, refer to our IRS publication 15 Employer's Tax Guide. You can also go to our Small Business and Self-Employed Tax Center on our website, irs.gov, and search Small Biz, B-I-Z, filing and paying tax section. So filing employment tax returns, you're going to provide a Form W-2 wage and tax statement to both resident alien employees and non-resident alien employees who did not use Form 8233 to claim tax treaty benefits. You're going to include them on Form 941, Employer's Quarterly Federal Tax Return, and any other employment tax returns. You're going to provide a Form W-2 wage and tax statement to both resident alien employees and non-resident alien employees who did not use Form 8233 to claim tax treaty benefits. You're going to include them on Form 941, Employer's Quarterly Federal Tax Return, and any other employment tax return. You'll need to review Form 8233, and if it's correct, certify in Part 4, Withholding Agent Acceptance and Certification, as you are responsible for withholding. You are considered the withholding agent. Then mail one copy to the IRS within 5 days after you receive it. Give one copy to the non-resident alien and keep one copy for your records. See Form 8233 instructions for the mailing address and wait at least 10 days to see if the IRS has any objections. If the IRS notifies you that it objects to the non-resident alien's claim for exemption from withholding, you must immediately begin withholding. Obtain a new Form 8233 every year as long as you pay this person to work for you. For your Form 8233 filers, you will have new employment tax return filing requirements with the IRS. They are Form 1042 Annual Withholding Tax Return for U.S. source income of foreign persons, Form 1042S, Foreign Persons U.S. source income subject to withholding, and Form 1042T, Annual Summary and Transmittal of Form 1042S. And remember, this is your non-resident alien employees who claim tax treaty benefits, as well as any non-resident alien independent contractors you paid. By March 15th of the year following the calendar year during which the non-resident alien performed the services, you must file Form 1042 and 1040S with the IRS. Let's start filing employment tax returns. We're continuing with that. Let's start with Form 1042S as to how you file it. File a separate Form 1042S for each person and each type of income you paid that person, whether you actually withheld the money or not. You must also issue a Form W-2 for any amounts that are not covered by a treaty exemption. For example, if you live in a state or other locality that taxes this income and that might even require withholding, you will need to file a Form W-2 with those taxing authorities for the income and any withholding. Those taxing authorities do not take Form 1042S. Give a copy of Form 1042S and any Form W-2 you file for each non-resident alien employee who claimed tax treaty benefits, and to each non-resident alien who provided independent personal services, whether you withheld taxes or not. If you file Forms 1042S on paper, you must also include Form 1042T, that's the transmittal form, with the copies you send to the IRS. Finally, if you must file Form 1042S for even one person, then you must also file an annual return on Form 1042. You do not need to give a copy of this form to the individuals who work for you, but you do need to keep a copy for your records. So in reviewing, hiring people who are not U.S. citizens usually requires some additional procedures. The penalties for not meeting your withholding requirements can be quite substantial, just as they can be for not withholding or reporting properly when you pay U.S. citizens. For non-resident alien employees who are not claiming tax treaty benefits, use Form W-4 following the instructions in Notice 1392 and Publication 515. Include them on Form 941, Employer's Quarterly Federal Tax Return that you file with the IRS, and give the IRS and any localities taxing them a Form W-2 showing the withholding and payments. For non-resident alien employees who are claiming tax treaty benefits, use Form 8233 instead of Form W-4 and withhold according to the treaty. Include them on Form 1042 when you file with the IRS. Give them and the IRS a Form 1042-S and give them and any localities taxing them a Form W-2. For non-resident alien independent contractors who are not claiming tax treaty benefits, use Form 8233 instead of Form W-4 and withhold 30%. Include the withholding amount on Form 1042 when you file with the IRS. Give them and the IRS a Form 1042-S and give them in any localities taxing them a Form W-2. For non-resident alien independent contractors who are claiming tax treaty benefits, withhold at 30%. Include them on the Form 1042 you file with the IRS. Give them and the IRS a Form 1042-S and give them and any localities taxing them a Form W-2. If you would like more information, please see Publications 15, IRS Publication 515, Withholding of Tax on Non-Resident Aliens and Foreign Entities, and Publication 519, U.S. Tax Guide for Aliens. Information is available at USCIS, the United States Citizenship and Immigration website. And that is the conclusion of lesson number 8. Thank you for joining me this evening and best wishes on your business. I don't know how that was a lot of information. You're definitely going to want to go to the website, get the publications, and review the slides for anyone in that situation. So it's a little complicated. Are there any questions? Yes, there are. No. Okay. Oh, not a problem. You too. Thank you, Morgan. Thank you, Kelly. Thank you, Barb. Oh, Barb was on. Okay. Oh, more messages. All righty. Thank you, guys. Thank you for joining. Thank you for taking time out of your evening to come on board. Any advice on becoming a tax preparer? Oh, good. I'm glad you learned a lot, Brandy. I'm not sure what you mean by becoming a advice on becoming a tax preparer. Do you have any experience doing it in the past? Okay. Oh, Tony, you were here today. Good. Glad to see that you return. You help people do their taxes. Okay, no experience. When I was interested in doing taxes, I reached out to tax preparing companies to um, see if I could get picked up and gain some experience that way. That was many, many moons ago. I don't know if they still do that. I think they do though. Um, I'm I would kind of suggest that path. Um, I know Vita is doing, yeah, yeah, the Vita sites are doing training as well. Um, thank you, Barb. I would probably more lean towards going the Vita way, um, just to get the experience and also to learn the proper way to prepare taxes. When I was doing it, it wasn't as complicated as it is now. The rules were very, very different. So you definitely want to make sure that you're being trained correctly. Before I let everybody go, I do want to ask, is there anyone here that's currently operating a business? Or are people just thinking about getting into business or just on here for general information purposes? Well, I have two questions. That's the first one. And then my second question is, does anyone want to provide any feedback as to how the IRS is doing? Are you encountering any problems with interacting with us or finding information? Are there any suggestions on how we can do things better? Okay, good. Waiting for Vita to start. Okay, great. You have a business and an employee. Okay, good, Brandy. I hope you found some good information here for your business. General information. Okay, awesome. That's good to know. Okay, you have your own business too. Great. Thanks, Kelly. Okay. I'm glad people found this very helpful. Awesome. Any feedback on how we can do things better, how we can improve? Bookkeeper and tax. Okay, great. Oh, okay. Thank you, Tony. We're doing great. All right. Oh, thank you, Veronica. I appreciate that. Wow. So when you're talking amongst yourselves with your fellow cohorts, your family and friends, nobody is complaining about the IRS. Wow, that's hard to believe. But I will send that information up the chain. You're welcome, Tony. It was a pleasure having you on board. Well, that's all I have.
Okay, well, that's the end of our program and the end of the series. So everyone who's registered will get an email of the recording and a copy of the slides. We do have another tax related program in December. I will actually send a link to all those if anyone is interested, and all of them are also recorded. And I hope everyone has a good evening.
Yes, same here. Thanks again.